All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, spiders with a vicious down week in the markets, down 3.38% on Friday. We gapped down Monday, had a little bit of a micro kind of bearish inside bar here, and huge flush there on Friday, humongous reversal there on the charts. Most of this coming on the back of Jerome Powell at Jackson Hole on Friday, reiterating, essentially a tougher stance on inflation. He did partly say what the market wanted to hear in terms of rate hikes being data dependent, which is something the market rallied on earlier in July. The difference now is that he didn't really say that we're going to pivot for sure. He didn't say that we're going to stop for sure. He said it will be data dependent. So back then, the market loved that because it opened the door for a pivot. And the market really just assumed at this point, like, hey, that's it. He's going to start printing money. He's going to start doing QE again. Who cares if inflation's at 8%? He's just going to do that, which was ludicrous. And we made that clear here, that this was just a summer rally and the market was getting ahead of itself and that we would end up lower here. And again, the bond market was confirming that. But in any case, the difference now is data dependent means uncertainty, and the market hates uncertainty. So now, yes, Powell might slow down. We'll probably do a 50 basis point hike in September. They may do less than that the next time, but the market doesn't know that. Now it's dependent every month, and the market has to play a guessing game. So the market is not liking this at all, and that's why you're seeing that big dump on Friday. So overall, we've been calling this for a while, saying like, hey, we're going to have a summer rally. We got the summer rally. And then as soon as we had that CPI gap in August, on August 10th, everybody said, oh, that's it. It's a new bull market. And, I was sitting here saying, well, this is not a bull market. It's just a bear market rally. The bond market's not confirming this rally either. And, the market came to the realization of that on Friday. So ultimately, I think we're headed lower as we come into September here as well. Historically the worst month for stock market returns, and we may even take out the lows here. So let's not get too ahead of ourselves here. Let's just take it 1 week at a time. But overall, I think at the very least we're coming down into this probably around 400 area, maybe a pierce of 400 on the spiders, and that would take you right into that 50 moving average. You might pierce that a little bit, and then if you get through that, there's going to be some support down here around 390, 387 on the spider. So those are kind of your short-term levels there. On the downside, you can see the triple Qs. Also kind of, watching this blue line here, and we had a nice breakout above it and couldn't sustain it. We came up into this little pivot here, basically kissed it, and then now we're back inside of that trend line. We've taken out that gap from August 9th to August 10th, just like the spiders. In short term, you're probably headed down to that 300 handle, which again kind of coincides there with that 50 moving average. So triple Qs with a failed breakout, also a failed breakout here on the Dow. If we look at the Dow futures, YM here, beautiful rising wedge pattern. You got one daily chart close above that 200 moving average, and I'm sure everybody got on board there thinking this was a breakout, and we had a nice reversal and a huge flush there. So a failed breakout on the Dow and on the NASDAQ from those trend lines there. So pretty good win for the bears this week, all things considered, and we definitely have to respect that, especially as we come in to the month of September here. Anyways, let's check a few sectors here. Semiconductors, there will be a little support here around 218. So you got that pivot high there. We're into the 50 moving average right now, but I wouldn't really make too much out of that. We've traded through it so many times here recently, but overall 218, and I got 211 penciled in as support. Take a look at NVIDIA here as well. This had earnings on Wednesday afternoon. Stock rallied nicely on Thursday and then completely negated that move on Friday. This is also a little bit of a head and shoulder pattern here. It did trigger on Friday with that close. So there's your shoulder, head, shoulder there on NVIDIA. That should take you right down to about 144, 145 here. So basically back to the lows there. Semiconductors are in a weak technical position right now. They had a chance to, they made a higher high here, could not make a higher low, and now taking out this pivot here. So semis are on the softer side now. Cloud software also weak. I do have this going down to about 275 or so. There should be good daily chart support there in the short term. XBI here, biotech. This is actually holding up a little bit better than some of the other tech names, but you have to figure it's also way more beaten down. So a lot of the negativity is priced in here. But overall, this is still headed lower with everything else. There's a gap right here in the daily chart, and that's kind of like where you consolidated here. So I think right down to that 80 handle would be kind of your short-term level there for a good bounce on XBI. Dow Transports here, you know, same thing, just like everything else. Rallied up into that 200 moving average, made a little topping candle there, shooting star, came down, little rally up, tried to hit the 200 again, and huge rejection. So this is probably headed down to that red trend line. I've had this penciled in for a long time. This red trend line has been very good on the Dow Transports, right around 1480. And then again, you've got that 50 MA upsloping with the 100. So this whole area here is 14,100, somewhere in that range. Should be a good bounce area for the transports in the short term. All right, interest rates here. So 10-year actually did not move up too much on Friday. I think bonds did bid a little bit, partly due to, especially the 30-year, you can see the yield actually came down. So the 30-year bid a little bit. I think some of that had to do with maybe a safety trade overall. So rates did not move up big on Powell's comments. However, if we flip over to the yield curve, which is a little bit more important at this point, you can see we flattened out pretty sharply. 2s and 10s coming in, so back at a 36 basis point spread. 3-month and 10-year. This is not inverted yet, but we still have, a weekly bear flag starting to form here. So this is looking like it wants to go head to that inversion level here. 5s and 30s also taking a big hit here. So this is getting closer to that flat line as well. And 10s and 30s as well took a hit as well. So again, not inverted yet, but it was briefly back in June, and a pretty good breakdown there on Friday. So these yield curves are coming in, and again, they never really saw much relief over the last couple of weeks, and that was kind of one of the signals here that I was saying, hey, look, guys, this is a summer rally. The bond market's telling you it's a summer rally, and those yield curves are getting hit pretty hard, even though bonds did just a little bit on Friday, namely the 30-year, but I think it was more of a safety play than anything. Anyways, let's take a look at the home builders quickly. So XHB, ITB, VNQ, real estate all coming in pretty sharply. We'll have some daily chart support here right at that 50 moving average on pretty much all these names, but pretty much nothing could escape the bloodbath on Friday. Everything got hit really hard. So these real estate stocks coming in pretty sharply. XLF financials had a nice, impressive bounce here, basically off that gap fill, and couldn't fill it on the other side. Huge engulfing reversal there on the XLF, so that probably wants to come down to that 33 handle here in the short term. XBD, the broker dealers, this one continues to be ridiculously strong, like illogically strong to me, because we didn't even take out Monday's low on Friday, even with that sell-off. The thing with XBD, though, is this built no support on the way up. So this thing is probably headed back down to 420, and it can get there very quickly, because there's no, usually when you move up, you get a flag, you get a consolidation. This has none of that. This can go down just as quickly as it came up, so be careful with those broker dealers right now. All right, let's shift gears a little bit. Energy here, so crude had an up week here. Got a little bit of a bid. OPEC basically said that, we're going to reduce production, which is really the opposite of what the administration in Washington has been lobbying for pretty much the whole last year or so, and actually even longer than that. And they basically kind of just said, screw you guys, and so they're going to cut production now. That gave crude a little bit of a bid. In the middle of the week, we did make a daily chart higher high, and we got above that 20 moving average for the first time since June. So that is significant to me. I'm not seeing a huge breakout though, and let me explain here. I still think we have potentially one more little dip in crude. So we still have a red bar on the weekly here. So we're still inside of that. So technically you still have a weekly bearish inside bar below that 50 moving average. Now, at the same time, if you want to start accumulating here, I really have no problem with it. We're pretty close to what I think is the lower end of the risk range. But personally, for me as a swing trader, I've got to get a really good entry level. So it's more important to me to get that good entry. But if you're looking longer term, I've got no problem with you if you want to pick up some oil in this range. XLE here continued to be strong. So Tuesday, Wednesday, Thursday, green, and sold off with the rest of the market on Friday, but only down 1.17% here. You can see Exxon down just 1.2, Chevron here down just 75 bips, actually made a little higher high there. So these energy names are holding up well. I think a lot of it is due to the safety, of a Chevron and an Exxon right now. So that could be part of it. Also, I think that these are possibly being a leading indicator to crude breaking out in the next couple of weeks. Now, again, I just said that crude, I think, heads lower here, but I think after that, you're going to get a major rally. And I think there will be a pretty solid low put in place. So these energy names are starting to lead here, and they're showing strength. XOP, holding the gains of the week, even despite being a little bit red on Friday, only down 93 basis points. So, and that's with the spiders down 3.38%. OIH did get hit a little bit harder and pulled back off that 100 moving average, but short term, if it holds that 240 area, it can make a higher high. So energy stocks are holding up well, and yeah, I think we're getting to the point where they can just be bought on pullbacks at this point. But anyways, all right, so what else we got? So let's take a look at CCJ here. So uranium had a huge bid on Wednesday. Japan basically said, hey, we're going to start looking at nuclear production again, and obviously that gave a huge lift to this sector. And again, this is in a market that was down pretty substantially this week. Again, it was red on Friday, but only down 2.17% and still in the the very upper range of this breakout bar. So uranium holding up really well. Look at that weekly candle, outside week. Humongous move there for CCJ. This trend line has worked out really well for CCJ over the last year, really. And eventually, it'll have a correction or something, and this line won't work anymore. But right now, it is holding up really well. So you can take a look at the URNM. Nice outside week there, kind of stalled out at that 50-week moving average, but a nice surge there for URNM. Denison also getting a bid. The URA, so pretty much across the board, everything looks the same here. But uranium with a nice power move this week. Let's take a look at so some of these ag stocks were also on the run. The potash names, IPI started the week out here, in this 42, 43 range and closed just under 56 there. So a power surge there for the potash names. Mosaic as well. I was looking for one more little dip here on Mosaic, closer to that 40 handle here. We just didn't quite get there, but nice little move up, little bullish consolidation there, and a good pop here. Now coming into a little bit of resistance, but a huge little breakout there for Mosaic. Look at that weekly candle, now back above all four major moving averages. Trend is up, looks strong to me. DBC, some of the general ag names, not as strong of a move here. You did kind of break out of this range a little bit here. Still in a weekly uptrend. I like the move here. You closed above the gap high, so that is a sign of strength here. And it's in good shape. What can you say? Trend is up, weekly trend, nice spacing with the moving averages. And these ag names are acting well at the moment. Natty here, so Nat Gas did kiss that $10 handle on Tuesday. So we just got above that, just a little bit there, $10 and just under 3 cents. And a little bit of a pullback there, but Nat Gas is acting well. You can't really say anything bad about it. If it comes back to this trend line, that could be a potential buy area for a swing here. I don't know about anything lower than that. It's holding up really well at the moment. And Nat Gas just continues to be a powerhouse. It's ridiculously strong fundamentals. And speaking of, especially with Europe, I'm sure you guys have all seen this one, but take a look at this. It's circulated Twitter a lot here, but look where the energy price per megawatt hour was in the beginning of the year. So you're looking at just above 100 there, and we're basically at 1,000. Imagine your electricity bill going up 10x in like 7 months, 8 months. That's what these guys are looking at right now over there in Europe. So, Nat Gas and all of these energy plays are they're holding up really well, and this is the type of market that we're in now. And this is the distortions that these guys, the central bankers and the powers that be, the lawmakers have put us in, the ESG you know, this is where it's gotten us. So anyways, enough of that sermon here. Let's get into the dollar. Dollar, I think this still wants to go to 110. It had a nice reversal on Friday, you know, on Powell's comments. You can take a look on the intraday here. Pretty much sold off right into his comments and then rallied back up. So a big power surge. I think this wants to get to that 110 handle. After that, I think it does stall out. But dollar still acting well here, and can't really say anything negative at this point, other than that it's, you know, overbought, and you know, if you take a look at the monthly, it's still pretty much parabolic. So this thing will correct pretty hard, but you know, you got to respect it right now. It's still holding up well and holding trend. All right, let's get over to gold. So gold did dip on Friday with everything else, but for now, we didn't take out that low from Monday. So it still potentially could make a daily chart higher low here. And you know, it's showing a little bit of strength. I think the market's kind of getting this a little bit wrong here. If we look at GDX, and the market does this a lot, usually when there's a panic in the equity markets, you know, usually you get gold and gold equities to sell off pretty sharply. GDX was down almost 5% there on Friday. Usually that presents you with a really good buying opportunity. And if we get that, if we get a really good sell-off in the gold market, in the metals market, I will be personally buying physical, as I think we're getting pretty close to what I think is a really good buying opportunity here. But in the short term, for right now, it's still potentially making a higher low. You held that trend line there going back several years, so it could still have an ABC up in it. But we'll have to see. We'll take it one day at a time. If the market really starts to surge, if we get like a, and this is the thing that Powell did, I can't believe he did this. He kind of broke an unwritten rule by, the central bankers. It's like an unwritten rule. You don't dump the market on a Friday, because you can get a Black Monday when you do that. It's sort of like a thing. I'm surprised he was as hawkish as he was. But anyways, if we get a Black Monday type scenario, and we have panic here over the next couple of weeks, then I would expect, you know, gold to no longer make that ABC up. It'll get sold off to cover margin debt, just like it always does, and then it'll present us with probably an amazing buying opportunity. So that's kind of my outlook here for PMs at the moment. Silver, same thing, you know, a little bit on the weaker side. You know, remember the industrial aspect of silver does affect the price a little bit more, as far as, you know, when we're talking about rate hikes and so on. So silver a little bit on the softer side, but this one also will have a really good buying opportunity if we get down there. I've already got the levels worked out. Then platinum, I actually bought some of this. I think this has bottomed. I actually bought a little bit on this pullback this week, so full disclosure, but obviously it dipped a little bit here on Friday. I'm not really concerned with that. I still think the level we hit is a really good one. And then copper here, lastly, held up really well on Friday. So it was basically flat on the day, but I didn't like how you kind of like pushed up here. I was looking for a little bit more consolidation, but it held up well, you know, with everything else getting sold off. This was basically flat. So that is showing relative strength. I think on the weekly, if we can consolidate just a little bit more, copper's got some pretty good upside here in the near term. So copper looking okay as well, and it's holding up nicely. All right, lastly, let's get over to Bitcoin real quick, and then we'll wrap up. So Bitcoin's sitting at about 20,000 right now. Doing this video on Sunday. And, you know, we had that breakdown. We talked about that last week, bearish inside bar, and then it pushed lower again on Friday with the rest of the market. Now, it wasn't down nearly as much as you would think it would be, considering the spiders were down very heavily. Ether actually still holding up much better than the rest of the crypto market. It's still holding this blue trend line for, you know, at the moment here, but Bitcoin didn't get hit as hard. And again, kind of like biotech we talked about earlier, it's been hit so hard all year that, you know, it's at some point there's, you know, everybody who's sold wants to sell, or everybody who wanted to sell is already sold. Doesn't mean it can't go lower, don't get me wrong, but, you know, at this point it's already led to the downside so much that it's going to take a lot more force to push it lower at this current point. But again, still in a very weak technical position. You know, if we go back all year, you know, down, bear flag, down, big bear flag, down, another bear flag, down, another bear flag, and we've got another bear flag here that just played out over the last week or so. So again, Bitcoin in a very technical position. Your main positive, I think, is that, again, it's just so oversold that you could get a really good bounce here, because, you know, the trade is starting to become, you know, pretty crowded, it seems. Anyways, back to the spiders here. So again, just to reiterate, short-term support right around 400 here, and that 50 moving average, maybe a little bit of a pierce on it if we get some panic That usually does happen when you sell off with a lot of speed and velocity. And then after that, about 387 to 390, I've got a good level there on the daily chart. But ultimately, I think we are headed lower here, especially as we get closer to the month of September. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. And I will talk to you guys all next week.